Ladies and gentlemen, today I will be telling you everything you need to know about Terra, the home of the fan favorite Luna cryptocurrency and a burgeoning decentralized finance hub as part of the Cosmos ecosystem. You'll learn what Terra is, you'll learn about how it works, the Luna token, and how you can get started within the Terra network for yourself. So if you like learning about crypto and all the opportunities in this space, make sure you get subscribed and click the bell notification button here on YouTube so you get a heads up whenever I post new weekly crypto videos. Now, this Crypto Beginner's Guide is part of a series of educational videos focused on helping you get started with a variety of different ecosystems in an accessible and hype-free way. This series is brought to you by Trade the Chain, a powerful data platform that gives you bespoke insights into the crypto markets so you can make better decisions in the markets. If you sign up for Trade the Chain in the description below, you can get an instant access to data related to crypto sentiment, to market data, insights, and research reports, as well as a global community of professional traders that help each other find opportunities in the space. So make sure you check out Trade the Chain. Link is in the description box in this video. Now, to set the stage for you to really understand Terra and its native Luna cryptocurrency, it's really important to understand the history of the project and what Terra itself is designed to do and what problem it aims to solve. So Terra itself is a blockchain network built in the Cosmos ecosystem, which is an interoperability-focused blockchain ecosystem, and it is tailor-made to be a go-to platform for decentralized finance, payments, and other finance-related use cases. I actually think Terra puts it this way. They build, quote, programmable money for the internet. Now, Terra has been in mainnet since 2019, and it's been spearheaded by Korean entrepreneurs Daniel Shin and Do Kwon. And since then, Terra has blown away all expectations with tens of billions of dollars in total value locked within DeFi services on the Terra network. In essence, Terra is aimed and has largely succeeded in already building the roots of a decentralized financial system for the masses with their stablecoin issuance model at the core of the network's operations. And this is where the growth of Terra has really exploded, because all the decentralized applications and protocols built on Terra and those that interoperate with Terra focus squarely on its rich stablecoin ecosystem. In fact, Terra is home to one of the most popular stablecoins around, UST, which is a US dollar pegged stablecoin that has amassed over 10 billion in market cap, along with a plethora of other stablecoins representing various currencies from countries around the world. Terra provides the platform on which stablecoin payments and transactional financial services can be built at scale. And I'll talk a little bit more about that stablecoin ecosystem and what it means for the growth of Terra and the plethora of DeFi opportunities on Terra later in this video, so make sure you stick around and don't go away. Now, I would also be remiss if I didn't give you a bit more background on Cosmos, which I mentioned in passing a moment ago. But it's fundamental to Terra's origin and composition and how successful Terra is and could be in the future. Terra is a purpose-built blockchain network built in the Cosmos ecosystem. And what that means is that Terra natively interoperates and can communicate with other blockchains also built in the Cosmos ecosystem. This is because Cosmos itself is a protocol focused on building secure interoperability and the internet of blockchains, where many different networks can communicate freely with one another. Cosmos features a hub and spoke or hub and zone model for connectivity, where many different blockchain networks can communicate securely with one another through hubs that connect them transitively via the IBC protocol, which stands for inter-blockchain communication, by the way. In addition, Cosmos' developer platform offers accelerators and tools to make building one's own blockchain easier, namely the Cosmos SDK or software development kit and the Tendermint engine for consensus on these networks both provide tools for developers to build. With these tools, developers can build a proof of stake network with fast finality and block times at high scale using modular components that are ready to go and spend more time focused on what sets their own unique network apart from the competition. And that's just an example. You can build other types of networks. This means that building a custom blockchain tailor-made for your use case in the Cosmos ecosystem is getting more and more accessible as these tools mature. Now, you may be wondering again how this relates to Terra. Well, Terra was built with these very tools and benefits from what Cosmos offers in interoperability with other blockchains in the Cosmos ecosystem. In fact, Terra is a proof-of-stake network built with the Cosmos SDK and Tendermint engine, and it is smart contract enabled with the WebAssembly module offered also in the Cosmos SDK. So developers can build smart contracts now with programming languages like Rust, for example, very popular language these days. As a result of this composition, Terra is a highly scalable network and very flexible as a platform to build upon for all things DeFi. Terra can achieve transactions per second numbers well into the thousands with near instant finality, and it has a theoretical limit, at least, of 10,000 transactions per second, which is well beyond the current and expected future demand for usage of Terra from my perspective. The validators that govern the network via proof-of-stake delegation from everyday users serve as block makers on the network, as well as external data oracles that can bring real-world asset prices and other cryptocurrency market data into Terra to ensure DeFi protocols have the latest information needed to price trades and match assets and do all sorts of stuff like that. Everyday users like you and me can delegate the native Luna cryptocurrency to validators or pools for these governance functions in return for transaction fees from block rewards, with both the validator and its delegators being penalized as well with loss of Luna if any malicious activity is detected. So rewards or penalties depending on behavior. In general, users can earn staking rewards at around an 8 or 9% APY with 21-day unlock periods for delegated or staked Luna. And speaking of Luna, this brings me to the tokenomics behind Terra. But stick with me because the next topic is all about what has made Luna such an incredible investment over the last year or two and all the many opportunities it provides. So stick around. With regards to the token economics, the Luna cryptocurrency, the native cryptocurrency in Terra, has a maximum supply, a fixed cap of 1 billion, with around 350 million currently in circulation at the time of recording this video. Distribution of Luna in the beginning was centralized in nature, as it is with most projects these days, to be honest, with a large proportion of the tokens issued going to early adopters, team members, investors, etc., to the tune of about 46%, give or take, with vesting and lockups depending on the funding round. The remaining 40 some odd percent of tokens was allocated to ecosystem development and support, with 20% of tokens set aside for the Terra Alliance for community allocations and programs, and another 20% set aside for employees and contributors to compensate them for work completed in the ecosystem. And the remaining handful of percent was left over and was allocated to the initial liquidity for market operations at the network's genesis to ensure smooth operations from day one without community liquidity provisioning as a dependency. As I usually indicate in these tokenomics sections, I don't love concentration towards private investors, towards the team, etc., because it can be kind of opaque as to where tokens end up and how well distributed they are as the project matures. That said, your level of tolerance for this type of thing is really up to you. It's a personal thing. You'll be hard-pressed to find a token that isn't issued heavily during fundraising efforts to insiders and early investors with vesting. That said, I have to say that Terra is not nearly transparent enough in its transparency or distribution of tokens and the role insiders have in that distribution and market making activity. So this is one area that I think could be rectified as the project matures, improving that transparency and letting the people sort of audit what's going on. Now, the thing everyone's wondering about with Terra is why it's been growing so explosively over the last year and a half, seeing multiple new all-time highs for the Luna cryptocurrency and tons of hype in the market. The main reason is because of its core functionality, which is the issuance of stablecoins like UST, for example, which we talked about before. You see, stablecoins are the lifeblood of DeFi across the crypto ecosystem. Without stablecoins, you don't have a thriving DeFi ecosystem at all. Terra, as is its mission, has become a hub for the issuance of algorithmic stablecoins like the aforementioned UST stablecoin that's pegged to the value of the US dollar. Aside from increasing adoption of stablecoins, the way Terra issues these stablecoins is one of the major drivers for Luna's price appreciation, because Terra stablecoins are algorithmically regulated by the protocol through a complex burning or removing tokens from supply, circulating, and minting or releasing tokens into circulating supply, which is an arbitrage process to control supply dynamics and ensure the price remains as close as possible to the respective fiat currency it is trying to mirror or it is trying to be pegged to. Remember, stablecoins on Terra are pegged to the value of a country's fiat currencies algorithmically, achieving balance and stability by way of supply and demand. So in the simplest fashion, when a user wants to mint new UST stablecoins, for example, an equivalent value of Luna will be burned, effectively becoming collateral for UST issuance on a one-to-one basis. This also works in reverse, and UST can be burned to mint an equivalent amount of Luna. The net result of this is that rising demand for USD stablecoins or other stablecoins, for example, can become a lever for reducing the circulating supply of Luna as it's collateralized for the issuance of that UST. So much of the buzz around Luna's prices come from the deflationary nature that results from this collateralization process. The demand for stablecoins is unlikely to falter in any permanent way, and Terra's roadmap has reflected a clear mission to drop all barriers to adoption for its stablecoins. For example, in 2021, Terra's Columbus 5 upgrade brought support for Cosmos's IBC protocol, making Terra interoperable with other blockchains in the Cosmos ecosystem, which opened up Terra's stablecoins to be consumed on many different blockchains and their DeFi platforms. On Terra itself, you have notable DeFi applications like Anchor that offers decentralized savings and lending with yields in the range of 20% annually, which drives Luna and UST usage, of course. Now, I used UST as an example here, but the same story goes for other stablecoins, so just bear that in mind, not just singling out the US dollar stablecoin. So you can kind of see the fundamental thesis for Luna and the bulls behind it, right? As Luna is used to issue UST and other stablecoins, the circulating supply of Luna is further constrained and theoretically makes each Luna unit more valuable as circulating supply is removed. Now, on the flip side to the fervor around Luna lately, you've probably also seen some of the criticism and concern around the risk of stablecoins losing their peg, especially the UST stablecoin losing its peg to US dollar value if Luna were to crash in value significantly because it's collateral, right? And that's been a major topic of conversation. So in 2022, another update was made to Terra, forming the Luna Foundation Guard, which laid out plans to build a reserve of assets to over-collateralize UST stablecoins that had been issued to insulate the US dollar peg in the event of a huge Luna crash. As part of this plan, the Luna Foundation Guard has accumulated already over 40,000 Bitcoin to collateralize UST, which has been a major talking point in the sustainment of Bitcoin since the start of 2022. The original plan for the Luna Foundation Guard was to hold $10 billion worth of Bitcoin in reserves along with other crypto assets from around the space to provide this over-collateralization and to protect against depegging. For example, Avalanche's native cryptocurrency, AVAX, held to the tune of $200 million worth in reserves right now in the Luna Foundation Guard. So this is a continuously developing storyline, and we'll see if these reserves end up with that full $10 billion in Bitcoin, but it really does seem the Terra folks are doing what's necessary to provide protection against the depegging fears that had been mounting for a while. And with these things in mind, you may be wondering how you can get involved in the Terra ecosystem and start earning yield, participating in the network, and learning more about it. So let's go there next. Now, the first step in getting started with Terra is, of course, sorting out a wallet, which is the crux of everything that you do on a blockchain. As you probably know if you've been in the crypto space for a while or you're just getting started, you need a wallet. Now, the native wallet for Terra is called Terra Station, and it's available on desktop, mobile, and browser extensions for you to use. I'll leave a link in the description for that. As always, make sure you are safely managing your seed phrase and other sensitive information in an offline manner, so no iCloud, Notepad backups, please. From Terra Station, you can stake your Luna to earn yield for participating in block making processes. You can participate in network governance by proposing and voting on updates or community grants. You can natively swap fungible tokens on Terra from the app itself. So there's a lot of functionality baked in there. For example, governance votes may be held amongst Luna holders to issue a new cryptocurrency or a pegged stablecoin against a new fiat currency. So if you want to get your hands on some native Luna and start participating, many centralized exchanges offer Luna these days, with big names like Coinbase and Voyager being a couple examples, and you'll have to find the best place available to you, both centralized or decentralized exchanges, depending on your region and your preference. Once you have a wallet and some native Luna or Luna that lives on the Terra blockchain, you can dive into other DeFi opportunities like earning yield on Anchor Protocol's savings and lending ecosystem, for example. And I would be remiss as well if I didn't mention that Ledger hardware wallets are Terra compatible. So consider using a hardware wallet to conform to best practices and keep your crypto safe. Always recommend a hardware wallet. In terms of other applications and services that are great for beginners to check out, first, when diving into Terra, those interested in NFTs might like Random Earth, an NFT marketplace on Terra. Crypto Launchpad and Incubator fans might also be interested in checking out Pylon, which is a launchpad platform where one can earn interest and launch tokens for new projects in the Terra ecosystem. So you can get access to some of these early projects. DeFi fans can check out Astroport and Mars Protocol, for example, an automated market maker DEX and lending protocol, respectively. There are tons of things to do in the Terra ecosystem, even before diving in on cross-chain applications using Cosmos's interoperability functions. So do your research, know the risks, be careful, and dive in to find your favorite things in the Terra space by exploring. So report back here and leave comments and share your findings with others so they can find gems as well in this awesome Terra ecosystem. Now, the last major topic I want to cover is the future of Terra. What's next for the project, and what does that mean for you who's watching this video, might just be getting started in the Terra space? First of all, it's no secret that the plans we talked about for the Luna Foundation Guard have just begun to materialize with Bitcoin and other cryptocurrency collateral purchases for the reserve. The current plan is that Terra's reserves will continue to be bolstered by more and more purchases of these assets, probably up to that $10 billion goal for BTC. Expect to see more and more talk about these reserve purchases over the next several months. That's going to be big. Secondly, you should also expect more adoption for the Terra stablecoin ecosystem from other networks in the Cosmos via IBC. The barriers to adoption for Terra stablecoins are getting lower and lower and lower with the maturity of the Cosmos ecosystem and the networks within it. Many of the latest blockchains coming to the Cosmos are supporting IBC from the get-go, or at least early in their roadmap, which opens them up to integrating with Terra to utilize those stablecoins. Finally, it's also worth noting that Terra doesn't have a formalized or published roadmap, so it's hard to say exactly what the future holds for the project. But I'll speculate for a moment as to what's to come. I have a feeling that you're going to see millions of dollars of ecosystem funding put to good use, with several unannounced new projects and utilities coming to Terra in the latter half of 2022 and likely into early 2023. Secondly, you're also likely to see updates launched to Terra's core network for stability and performance improvements as that code base matures. And finally, I anticipate at least one, if not multiple partnerships with governments like Terra's native South Korea or large enterprises who wish to issue their own stablecoins or facilitate financial services upon Terra. Of course, these are all speculative. There is no guarantee here, just my hunch in the absence of a formalized roadmap from the team. Above all, the fact remains that Terra has become a hub for DeFi and, of course, stablecoin issuance. And that's no surprise. It was built with this very purpose from the start. With efforts to build maximum confidence and sustainability of yields on protocols like Anchor and confidence in the peg of stablecoins to their respective currencies in the real world, as well as work to improve transparency of Luna distribution on the network, Terra can alleviate and completely eliminate the remaining barriers to adoption and positive sentiment towards the project. So there are things to work on, but that said, what's been achieved to date is certainly an impressive feat, and one that I've enjoyed researching since it came into the scene. I encourage you to use this video as a launchpad to start your own deeper research into the inner workings of Terra and the opportunities therein, and remember to always be safe and know the risks before diving into a new ecosystem. There are always risks, so make sure you are aware of them and you're being careful. Research first. It's kind of like measure twice, cut once. If you enjoyed this beginner guide on Terra Luna and you learned something and you want to get more information like this, make sure you're subscribed to the channel, and you can find my beginner's guide on the DeFi powerhouse Fantom network on the screen here if you have some time to stick around. So thanks again, and until next time, cheers.